Good morning, traders. Paul here with GammaEdge. Today is Monday, the 22nd of August. Let's get started. Pause your players here, please. Read to the bottom. If you agree, hit that play button. Summary for today, short-term trend is down. We are in a third day of a short-term down. Intermediate term trend is down. This converted on Friday. Long-term trend is up, but it's under pressure. Be aware. If you've got positive long profits, you may want to look at those very, very carefully. Of course, these are paper trades only. Nothing here at GammaEdge is a recommendation to buy or sell any security. The OPEX pushed the AM settled zeros lower. This is because as positive gamma and deltas come off of the complex, that shifts the transition zone upward, and that causes a little more instability. Be on the lookout today, especially with the anticipated drop down for some back and forth action. We're looking at about a 2% expected move, open, high, low, close today. Positive GEX dropped. It was at 4,400 on Friday. It dropped to 4,300. Part of this is due to the OPEX, of course, and that can be a confounder. But in general, it doesn't really matter when we see a drop from 44 to 43 or a drop in plus GEX. That basically is a cautious indication as calls are being closed, whether it's from the OPEX or from something else requires further analysis and other tools that we have here, but suffice to say, be aware. Line in the sand is really 4105. This is what we call negative trans or N trans. For the SPX, below this we have dominant net negative gamma per strike, and so when we see that, that's a big deal. And so if we lose the 4105 intraday, keep an eye on it. If we lose it into the close, that'll be opening the door, we think, for a downside 4,400, or excuse me, I should say 4,000. Downside 4,000, that 4,000 contains minus GEX, COI, and POI and is unchanged. So just make sure you change that to 4,000. The market model, getting into a few of the details here. Short-term down, you can see the instantaneous cumulative tick is below the short-term moving averages and it's making lower lows. Whether you want to follow the short-term MAs or just look at the lower lows, it's pretty clear what's going on here. This is the tick RC, which is the ARCX model. The intermediate timer is turned off. We've gone to cash. When that occurs, which is a trigger from this penetrating these upper levels of the moving averages, we want to be on the sidelines. We want to protect our profits if we have any, and if you have losses, certainly I would be looking very, very seriously at a paper trade out of those. Long-term timer is still bullish, but you can see it's weakening, and the lower the instantaneous cumulative tick moves, the more this is going to flatten out and potentially go the other direction. We are looking for this white line to break the lower moving average. If that occurs, the model will be fully cash with a bias towards going into contra ETFs and the short side of the market. There are a number of nuances there, so make sure you come into the Discord and ask questions if these balloon callouts are not obvious to you. SPX condition, the biggest thing to note compared to the previous day is that despite a lot of positive gamma coming out of all these complexes, we've had a major increase in the negative gamma too, and when you get back to what's called parity, where the net negative gamma and the net positive gamma are more or less balanced, we get into a situation where we're in transition. It's a very tumultuous type of environment where there's not a lot of dealer pressure because we're balanced on either side. Over here is the SPX combo. That combo is comprised of the SPXA and the SPXP, AM settled monthlies, which just expired, and the PM. The key takeaway for you is that we've had a major shift, in part due to the OPEX, but also just due to risk off. We've seen that through the cumulative tick model. The last 3 days have been selling, and that's really evidenced by the major change that we saw on Friday. When we take a look at the zeros, again, SPX combo here, AM settled here, PM, the SPY, the Qs, and the IWM here. Key takeaway is that every time we have a major OPEX, we have a shift downward. It's not predictive, but it does let us know what the new balancing level is going to be for a while. And we've been in this uptrend on the A, the SPXA, and this is a big deal because we want to see this continue. If it continues to erode from here, I think we'll have some indications of what the institutions are doing going into Jackson Hole this week, Labor Day, and then into the end of the quarter through September. The SPX, you see a lot of red over here. This is due to the OPEX that occurred, and effectively what we're looking at here is that we're seeing quite a bit of rotation out due to the OPEX on Friday, and we'll want to pay attention to this and see where that money went to. You can see that it actually was distributed in fairly significant amounts, which grew 200,000 contracts, well over 1 million contracts on the put side, nearly 600,000 contracts on the call side. And you can see how that was distributed in terms of expiries, where they went out to September, October, November, etc. You can see the distributions of which were closed, and you can also see the new distributions which were open. I actually like this presentation because it gives us a very clean indication of what the market is positioning for. And you can see just when we look at some of the major intervals that we see here, 20,000, 40,000, 10,000, 20,000 here, we're actually pushing a little bit more on the negative side, and you can also see that here. You can click on these charts within the Discord and interact with them. You can zoom them. The cursor is highlighted, excuse me, and you're able to really drill in here, and I would urge everyone to do that. Looking at today, the key levels for today, 4,300, 4,000, as I said, those are really the dominant levels to watch. This is the JPM short calls that expire at the end of September and will be rolled out. You can see there are a lot of intermediate levels in the SPXP complex that are not showing up in the combo complex, and that's because the combo complex absorbs them. 2% move expected today, so just be aware of that. That is a conservative estimate, meaning that we generally are below that. It depends on the volatility of the model. But you can see the upper and lower ranges here. Taking a look at the 0DTE, this is the 0DTE view of the PBI, the GammaEdge that we have. It's normal sized. I've drawn the range bars here so you can see kind of where we are. We closed right at the bottom of the 0DTE transition. Below this is all net negative gamma. We've got the green is going away, and on the 0DTE that's not as much of an indicator of what's happening, but just note that puts are really beginning to dominate the conversation on the overhead. So this is net negative deltas on the overhead, and in the positive instance of what we're looking here, you can see where the positive gamma is, and effectively the positive gamma going up is going to be a problem for us to move into. Also note the contribution from the 0DTE once we get outside these levels is going to be pretty minimal. Taking a look at the combo complex, very large ill-defined transition range here. Here's plus GEX, here's minus GEX, here's the COI, POI combination, negative gamma here, positive gamma here. We're still net negative positive on the delta notionals. That's important. Note that the levels, though, key levels here, with the exception of the 4,000, 4,005 strike, really are not dominant as they were on Thursday and Friday of last week. We are absorbing these in part due to the OPEX, but in part just due to more puts going in, and when those puts go in, it reduces this. When we start seeing more red develop, that's net negative delta notional, and as we see that increase through here, we get cracks in the ice. So 4,000 is the definite line in the sand for now. I don't anticipate, really, even though we're close to the top of the range here, I don't see how we're going to close above this 42.40, 42.45 range, just because we're starting to lose the upside. This is a nice picture of the overall structure. I think the key takeaways here, we closed here at 42.28. We're at the top of this transition. We're starting to slip deeper and deeper and deeper into it. We're also seeing some weakness here. And again, this is partly due to the OPEX, but it's also partly due just to people closing those calls. And getting out of the market. 4,300, it's dropped, it is growing. Here's the 4,000 strike, and that's a big deal. So we'll want to pay attention to that. In general, the deeper we go down into transition, the more noisy things are going to get. I will say that the definition of plus and minus down in here is getting weaker, and so we have a greater likelihood of calls being closed as we move down and these become under pressure. This is positive gamma due to those long calls, and as a result of that, we could very easily get trapped in a negative gamma environment. So just be aware of that. So that's it for today. If you have any questions, comments, suggestions for improvement, please come over to our Discord. You can get there by going to GammaEdge.us, click on the pricing tab. That'll take you to a sign-up page, get you into the Discord, 14-day free trial, all the tools turned on. Lots of great traders, lots of experience levels, portfolio sizes, a lot of paper trading going on. We have a lot of us are logging our trades and showing people what we're doing, so that's always good. Follow us on Twitter, please, with GammaEdges with an S, and then here on YouTube, of course, smash that like button. If you like today's content, let me know that I'm on the right track. And of course, subscribe so you can get notified next time Mike, myself, or Taylor post something. Of note, I am traveling this week and will be limited in my ability to produce these, so make sure you watch Taylor's end of day summaries that he posts here in the same channel, and I will rejoin you most likely on Friday morning of this week. Everyone, take care, have a great week, and hope to see you in the Discord.